Hello everyone, welcome back to my channel. In today's video, I'm gonna take trades with stochastic oscillator, MACD, and moving average. So let's get into the trades. I'm taking this. As you guys see, the stochastic oscillator has been crossed, okay? Then the MACD has been crossed. And based on all my analysis, I took this trade. Plus, I saw that the price tried to break the moving average. It did break it in the lower time frame. It broken it, okay? And that's the reason why you see the price coming down. You can't see it in the lower time frame, but because of candlestick psychology, I know that in the lower time frame, the moving average has been broken. Guys, the platform registration link is in the description. You can create your account and practice this free strategy, okay? Yes, so this trade is gonna be a winning trade. Okay, all right. Yeah, beautiful. The thing I love about this strategy is it's so simple, and to be honest, opportunity is pretty frequent depending on the time frame you use though. I'm using the 30 seconds time frame, so I will find opportunity more often than someone who uses 1 minute, 2 minutes, 3 minute time frame, okay? And that's the reason why I use the 30 seconds, because I'm doing a YouTube video and I need to find opportunity enough so when I'm recording, you guys can see the trades very quickly. And the next thing, guys, I want you to understand that all these strategies, they work on every time frame. The time frame doesn't matter, okay? It's just with time frame, your trade close faster than other time frame. That's it. It doesn't mean that the strategy won't work or not. Every time frame is the same. I want to let you know that, okay? Let's find our next trade. Okay, I'm taking this. It's a little bit risky because we have crossed the moving average a very long time now. As you see, I should have entered right here, right, and this tall candle, and I would have won that trade very cleanly and nicely. But unfortunately, I reached very late, okay? So the main thing that we are looking for, guys, we are looking for a cross on the stochastic oscillator, and we are looking for a cross on MACD. Then we are looking to see if the price is above our moving average, okay? When all conditions are being met, then we enter trades. Do not, I repeat, do not enter trades because you're bored or because you're impatient. Impatient traders lose money. Patient traders make money. And with patient comes discipline, because you have to be very disciplined to your rules, okay? I will continue this psychology speech and the next trade. I'm taking this, okay? I'm expecting the price to go higher from this direction, all right? Based on everything I'm seeing here, we have crossed the stochastic oscillator and we have created a 3-bar up, but that's not the main thing. I saw that the 3-bar up gave us a retracement, and based on candlestick psychology, these 3-bar up usually gives retracements, and I saw that, so now I know the price will go higher, right? The thing is, I'm just a bit late, but I think this trade will be successful based on my analysis and based on the fact that I see MACD and stochastic oscillator reaching to their oversold level, overbought level. Right? I seen that they are reaching their level, so that means the market is trying to reach somewhere. Okay, I'm taking this right here. The reason why I took this, I saw that the price is above the moving average. No, my entry should have been right here at the line, but unfortunately I reached very late, and this is not advisable, guys. Make sure to take your trade all the time when the price just crosses the moving average, and you see your signal from the stochastic oscillator coming from the oversold level, right? And MACD cross also. Make sure all your signal are giving you the same direction at the same time. All right. Do not neglect any signals because it can affect your win rate. This is very crucial, guys. You have to follow every rule. Do not try to break rule. That's how you become unprofitable, when you break a lot of rules. Try to stick to your rules all the time. Let's continue on the next trade. Okay, I'm taking this, no bad entry. All right, so guys, as you see right here, we have broken the moving average, right? And I want to say something very important to you guys. The moving average I'm using today is a little different from the one I usually use. Okay, this moving average is called EMA, it's not the SMA, meaning the EMA is much accurate than the SMA, because the moving average it crosses, because the moving average it's a better dynamic support and resistance. It follows the price much closer. So this means you will get less lagging signals from it, okay? With the SMA, it's much lagging, so therefore you will enter trades late and trades will reverse on you. But if you're very smart, you can use the SMA also, okay? All you need to do is just make it more sensitive to price. Simple. But with the EMA, it's naturally sensitive, and that's very good for quick entries. I'm gonna continue talking about this stuff on the next trade. Okay, I take this trade here because we are coming from the oversold level, and I'm seeing that the MACD is above the candles of the MACD of the histogram. Yeah, okay, and yeah, the main thing I was talking about earlier was the EMA, right? If you notice very well, you will see that the EMA is supporting the price, okay? You notice it broken, support. See that? Well, this going down is resistance, so it resists the price, okay? But I just said support. It's kind of it doesn't matter. Anyway, you can see how the price respects the EMA. You see that it bounced off it, broken, bounce off it, broken, bounce, then it broken. Okay, all these stuff, guys, you need to understand that. All right, beautiful. This trade was a winning trade. Okay, I'm taking this even though I'm a bit late. Damn, this trade is very nice because the price is freshly coming from the oversold level. Alright, and the MACD haven't fully crossed as yet, but I'm pretty sure it's gonna cross because the histogram is already moving higher, showing me that there is a strongness in the price moving higher also. So remember, guys, when you're using the MACD, it's very crucial that you use the histogram also, right? They are very useful if you know how to read them. They are basically candles, guys. Basically candles, right? So they are not that difficult to look at because you're looking at candles also on the chart itself, right? And yeah, we crossed the moving average. If we were entering right here, this trade would have win already. But hey, it's still a win. Win is a win. Let's find our next trade. I'm taking this, guys. I have noticed the price haven't reached the overbought level properly, so I still have room for the price to go higher. Plus I'm seeing a supply right here. I'm not really trading chart patterns or anything, guys. I'm trading literally the indicator, but I still see other stuff on the chart, which is good. This is the benefit of my mentorship. You'll be able to see other stuff, right? And you can combine them. But today I'm just using straight indicator, even though I can tell you that we are coming from a supply area also, but that wasn't the main reason why I took this trade. It's because of the indicators. And yeah, back to what I was saying, I could see that this candle closes as a continuation sign. So yeah, that was a win. Let's find our next trade. I'm taking this. Alright, you can see that the stochastic oscillator has crossed and the moving average is supporting the price. Okay. And another thing, I realized that the histogram is showing me green, 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 green. So it means that MACD might cross any moment and it's very close. And when MACD is very close, it's a high chance that it will cross. That's the reason why it comes together, so that it can cross. There's no other reason, all right? So basically that's common sense, and that's why I said to you guys that the closer MACD becomes, the quicker it's gonna cross. The wider it is, the longer it's gonna take for it to cross. Okay, and we combine this with the dynamic support and resistance, which is moving average. Okay, and that trade is a winning trade. Right, I'm taking this. Beautiful. My entry was on point. Okay. All right, I'm going to explain this trade to you guys now. As you can see, our stochastic oscillator has crossed, MACD has crossed, okay, and MACD has crossed its own candles, meaning that it's so strong to the point where it didn't even wait to cross over, it crossed between the candles. That's showing me strength and aggressiveness. All right, you have to pay attention to the indicators. Let me tell you something, guys. The indicators, it's speaking to you. The thing is, you don't know what to listen, what to look for, and that's the problem. Okay, and that's the reason why I created my mentorship, so that others who don't understand would get the chance to understand. Because I could keep the information to myself, right? Well, I'm not that type of person. I decided, why not, share it with others. But okay, right, guys, I want to say something very important to you guys. This is a super, super pro tip. If you want to be successful at compounding, you need to compound and stop at the amount you're comfortable losing. For instance, if you take trades with $100 normally, right? And you never take trade with $500, do not compound to 500. Do not do it, because the moment you reach $500, your emotions are going to take over and you're not even going to analyze the chart as you were. The best thing is to stop at the 100. For instance, if you're starting from $1, you do 1, 2, 3, go all the way to 100, then you stop. Don't try to do 300, 500. You have not yet used to losing that amount of money, and because of those reasons, you will lose your mind and you will start to lose trades. I will continue this on the next trade. Okay, I'm gonna tell you guys a compounding psychological secret. Right? It's not really a secret, but many people don't know about it. Guys, you have to understand this. If you are starting from $10 compounding, okay, you cannot go to 2,732. You cannot do that, because you have never taken a trade for that amount normally. You have always traded 10, 20, and 30. You have to stop at that number. If you only took the highest trade possible for $50, do not compound from $10 to 100. You have to stop at 50. The moment you take the trade for 50, you cannot take the next trade for 100. You cannot do that. If you do that, what you're doing is you're allowing emotions to come into the game. Okay? And that's not good. You cannot allow your emotions to take over. But that's what's gonna happen because you have never taken a trade for $2,000 or $100 and then you want to do it in a compounding session. No, you're gonna lose. If you have taken trades for $30 normally, comfortably, then you can compound from $5 to $30, then start back from $5. That's a money management for compounding. I hope you guys learned something new today, and I'm gonna try and find some more trades and talk about this stuff. Okay, today's indicator will be stochastic oscillator. Okay, K period 8, D period 3, smooth period 3, moving average SMA. Okay, the style, I keep it the same. I just adjusted the thickness of the lines. Cool. MACD, fast period 8, slow period 18, signal period 8. Okay. Then the colors, I only thicken the lines. I didn't change them. For moving average, period 28, moving average settings are EMA. Okay, the settings is EMA. I'm making sure I'm repeating this part because I don't want you guys to get it wrong. And then the style is light blue, 2 pixel. That's it. That's the settings for today, guys. Guys, I was late for this trade because I was trying to put the dollars amount in. Guys, my entry was so bad, and it turns out my trade is going to be a winning trade. That's crazy. That's crazy, guys. I'm only taking this because the price has freshly crossed the moving average. Not fresh, but kind of fresh, you know what I mean? Right, guys, as I was saying previously about the compounding session, you have to take trades with the amount you're comfortable losing. If you're comfortable losing $50 because you have taken $50 trade frequently, yes, you can start compound from 10 to 50. Once you bet the 50, you have to start over from 10 because you're not comfortable losing 100. So the moment you try to, oh, let me bet 100 because I'm confident, no, that's not how trading works. Your psychology is going to be all over the place. You're going to be nervous to take that trade because you have never lost so much money on a single trade. So try to compound like that is very risky. Okay, you have to compound the amount you're willing to lose and you're comfortable losing all the time. Guys, this will be it. I will continue all of this speech on a next video, right? If you guys want to join my mentorship, you can join my mentorship, okay? And contact me on Telegram to sign up for the mentorship, and I will see you guys in the next video. Peace out.